and expert consults from several organizations that have partnered with us to provide their service to the teams that compete. So FinCap Dev is a mobile app competition. This is the second year we are running this, and the goal and the mission is to create tools that will help underserved Americans make better financial choices and have better access to products and services. You know, this is the second year we are doing it, and people are really paying attention. We've developed an ecosystem of players across various sectors, quite a diverse group, that are committed to championing mobile innovation for the underserved. And more than that, they're interested in the ideas and apps that come out of FinCap Dev. And as you can see, the sectors there, it goes all the way from developers and technologists to students and marketers, and we're all working together to make this happen. So why are we doing this? As I said, G2D Fund and the Center for Financial Services Innovation have partnered to create this competition. We are both leading nonprofits committed to leveraging technology to help low and moderate income households access better products and make better financial choices. We don't take an equity stake in the apps. What we want to do is shine the spotlight on the opportunity for innovation for the underserved. We want innovators and entrepreneurs to build powerful apps, and it's a great time, and the opportunity is ripe for innovation in the fintech space. We'd like to thank the Citi Foundation, the Ford Foundation, and the MetLife Foundation for their support. So why should you compete? As I mentioned on the previous slide, this is a great time. It's a very lucrative opportunity to innovate in this space. And if you've been kicking around an idea and you were just waiting for the right opportunity, this might be it. The unbanked are a huge untapped market in financial technology. And not only do you have an opportunity to build the app, but you have an opportunity to do it for social good. We're trying to lower barriers to entry for folks to build, especially entrepreneurs, by offering cash stipends and resources so they can get their mobile apps to market. So you could take an idea and develop it to a point where you should be ready to be able to take it to market. We have, as I said before, a chance to win $100,000 in prizes, additional stipends for teams that are selected as finalists. And then in October, you have an opportunity to present at a winners event to high-profile judges, a panel of judges, and other leaders in the fintech world. People in the industry are paying attention to FinCap Dev, and this is an opportunity for you to take advantage of that. Who have we partnered with to provide those tools and expert consultations? As you can see from the slide in front of you, we have partners from leading financial services and technology firms. Finalists that are selected get access to technical tools such as software to build apps, analytical software, APIs, and connections to seasoned professionals in user interface design, technology, mobile app development, app monetization, user testing, a bunch of other things. Some specifics about the competition. We launched in January, and the call for proposals actually ends in April 7th, which is less than 2 weeks from now. And after that, after the proposals are submitted, there will be a phase, an incubation phase, which is where teams will actually develop the apps, and we will go through a selection process And about 10 to 12 finalist teams will be selected in the app, and that's where they get the access to the resources and expertise that I just talked about. Actually, I just skipped a slide. Sorry about that. So some key milestones I already talked about. April 7th, we should be making the decisions fairly soon after that. The announcement of the finalists is actually going to be made in early May, and then the apps will be developed from May to September, and then we have a demo day in October. This year, actually, we've done something new. Throughout the open call for competition proposals, we've hosted one hackathon, and we will be hosting another one this weekend in New York, and that's on March 29th and 30th. So if you're in New York or you know people in New York, please let them know about the hackathon. It's going to be held at WeWork Soho, which is a co-location company in Soho. There will be a grand prize of $3,000, and the winner of the grand prize also gets a FinCap Dev finalist slot, and also cash stipends to build the app, and the shot at the prize purse in October. For these hackathons, participants will have to solve the financial challenges faced by different households that are profiled in our U.S. Financial Diaries cases. Financial Diaries is a research project that tracks more than 200 low to moderate income households over the course of a year and collects highly detailed data on household financial activity. As I mentioned, the hackathon is in New York this weekend, and the grand prize winner at the hackathon gets fast-tracked into FinCap Dev as a finalist. Finally, the call for proposals is still open, but is closing rapidly on April 7th, so please apply by going to fincapdev.com and clicking on the Apply button as you see on the screen in front of you. Thank you. And with that, I wanted to hand over the presentation to Jonathan LeBlanc from PayPal, who will be presenting us with what PayPal is doing with payments in the underserved space. If you have any further questions, please email us at info@fincapdev.com.
Thank you very much, Preeti. Very nice to be here. Welcome, everyone. My name is Jonathan LeBlanc, and I lead Global Developer Evangelism at PayPal. And a lot of what we do is in working with the external developer community, working with a lot of different markets throughout the world. So what we tend to see is a lot of the overall trends within the underserved community. And definitely within the technology space, we now have a vast array of new bleeding-edge technology that can be implemented very nicely, very easily towards serving this population. So what I'm going to do as I'm covering this overall topic and really diving a little bit deeply into it is interlacing it with some of the open technology that can be utilized to solve a lot of the problems that the underserved community tends to face on a day-to-day basis. So we'll go through that, take a look at some of the developers who have led the space, that have built hacks and built projects around serving this community and serving this overall need. So when we're talking about the underserved community, what we're really looking at here are two definitive markets, the underbanked and the unbanked. So they are definitely two completely different situations for us, really different targets that we're really looking at. Now, within the overall unbanked situation where people are paying primarily with cash. They do not have checking accounts, do not have savings accounts, and really are functioning like a cash-based society. They're working primarily with maybe an alternate financial service that can actually cash their checks, working with money orders towards making payments, but really they're not engaging within the credit card mechanisms. They're not engaging with the banking situations, and they tend to be a harder market to overall hit. And they also tend to be one of the markets that is abused by a lot of the services that are out there, which we'll cover in a little bit. Now, this market is what you're going to see from these people, from this overall situation, is that they might be immigrants into the country. They might be people with that don't really work with the financial situations or the banking institutions. They might be people with poor credit scores. They might just be people who want to go completely off the grid and not work with a banking institution because they don't trust them. So there might be a whole series of reasons for people to be overall unbanked. The underbanked, on the other hand, are those that do have a mechanism of banking or financial institution around them, such as a checking account or a savings account. They might have one or the other, and they are easier to hit because the barrier to entry for them hitting mobile payments or mobile purchasing or working with a financial institution are lower because they're already working with them. But these people, and an overall large number of Americans overall, in this type of market, do also use these alternate financial services like the check cashing or money order services or payday loan services. These services are out there to help them work with cash, and really what you're going to see from this market are people maybe that aren't familiar with the banking institutions. They might be people who have had credit problems in the past. They might just want to work in that sense. So reaching this audience is actually a prime target for the mobile industry. So the mobile industry is leading the charge on a lot of the technology that reaches out to these individual markets, but we're going to look at how some of the technology is actually hitting them and removing these barrier to entries for them. So before I get into really diving into what it looks like in the U.S., what this market actually looks like, because it's a lot larger than a lot of people really understand, and it's a very lucrative business for very many institutions out there. What I wanted to start with is just kind of a personal story. So the reason why I tend to talk about the underbanked, underserved community, and why I feel strongly about utilizing technology towards that, is because I've been in their shoes before. So I moved out when I was probably about 16, started college around 17, and when I had done that, my first year I was able to get financial loans. And I was able to work off that, work a job, and part-time, and still pay for my education as well as, the bills I might have. So in my second year, I ran into a situation that a lot of people run into. My family actually made too much money for me to get loans, but they, like most people in North America, were in a situation where they were only making enough to pay their own bills and living not just in a little bit over month to month, but just being able to put down a little bit in savings as they went along. Now, mind you, I did grow up in Canada at this point, but what this meant for me is that I've already lost a source of income to me. So ended up working a few jobs to pay for things, but with overall bills and trying to go to school at the same time, I got into the situation that a lot of people get into and made the mistakes of getting credit and using credit where I didn't have the money to afford it, and then making those mistakes and not being able to pay it back. Now, what this meant once I was out of school was that I was already at a detriment because I had to rebuild my credit, had to repay these loans, and really there was no option for me to get a bank account. There was no option for me to make payments on anything because my credit was destroyed. It took years to rebuild that, and when I moved to the U.S., one of the pillars of me being here and my financial integration here was to maintain perfect credit. It was almost another chance to go through that. Now, unfortunately, and the really sad part is, my story is very similar to the stories of many other Americans. It's very common, and it leads to a lot of people running into these underbanked situations where I had to work with cash, I had to work with money orders, I had to work with these alternate financial services that were available to me just to be able to pay for my education. So this is why this system and really reaching out to this market hits me so personally, because I understand everything that people have gone through, and I see what some of the institutions out there are doing to these people, and it's not a good situation, which is exactly what the market is available in the financial institution to fix. So let's just actually take a look at what this market tends to look like. So let me go ahead and take a look at some of these unbanked and underbanked populations. So within America, 8.8% of households, that equates to 1 in 12 households, or 10.8 million people, are unbanked. These are people who do not have a checking account, do not have a savings account, are working primarily in cash with any other service out there that will work with them or allow them to work to basically buy things, etc. The biggest problem here is that they're working in a cash-based society where it's very hard to break into the mobile environment because because when you're purchasing over mobile, the ideal situation is to have a credit card or a funding source to be able to pay that. It doesn't make it very easy, but there are possibilities for getting there. Now, let's switch to the underbanked. They represent a large portion of America, 20.1% of the overall households in the U.S. 1 in 5, or 24 million. Those are the overall figures that some of the conservative studies have actually placed. Now, I've read quite a number of studies that have this number at higher, where they're saying that there are 17 million in the U.S. that are unbanked, and 51 million that are underbanked. So this is the more conservative of the estimate. But as you can see, massive, massive numbers. And this is a huge issue because it's a population that is usually just ignored. And they don't have to be. And that's been changing in the last couple of years. So what we've been seeing from a lot of these households is that of how they actually interact with these additional alternate financial services. So this is actually points us in the right direction on where we can build technology to supplement the problem. So in the overall households in the U.S., a large number, almost 30% of people have no savings account, and about 10% of people have no checking account. Checking account you can probably get away with, but not having a savings account is massive, and that leads to another problem, which is the overall savings. The vast majority of this populace will go paycheck to paycheck. So now, if they run into medical issues where they have medical bills, if they run into any eventualities where they can't pay for things, if they lose their job, they're automatically, after a 2-week period, or let's say a month period, already in the hole, and they can't survive for very long, which leads them down the road of taking these loans with astronomical fees. So these are some of the biggest problems that this type of environment has. Now, this is where those alternate financial services really come into play. So 25% of overall households have said that they've used an alternate financial service, because really, when you're dealing with a lot of cash, you need a service that you can pay for things like with money orders, or if you're not able to pay your bills when you're working with, let's say, payday loans, you can get an instant loan, and that can last you until the next payday. But we'll talk about that one in just a second. Then almost 1 in 10 households actually use these on a fairly regular basis and actually use 2 or more of them. So this leads us to show that this is really the market that they have to hit because it's the only market that's available to them. About 4 out of 10 unbanked and underbanked households actually use these services in the last 30 days, which when I'm really thinking about this, what this means to me is that they're using this as part of their banking and financial principles. So every 2 weeks, let's say, they're going and getting their check cashed or taking out money for it, or they're getting loans. Now, the check cashing or the money order side is really not that bad. It's a fairly good situation. A lot of people like to hate on it, but when you really look at the fees that they charge, fees that a lot of people say they're charging for their own money, that's the really area of contention. When you look at that as opposed to banking fees are much larger for taking out money or for the overall monthly fees, things like that. So realistically, those services offer a valid option for them to take out their money at a lower cost. But there's really one service out there that I have a really big problem with, and it's because of their overall principles. And those are their payday loans. This is really where the financial market and really where the technology side of things can really play in and start fixing things. Now, one of the biggest problems that I have within this overall market is not in what they do, it's in their fee structure. So in an ideal world, what would happen is a person would go in and say, I need a loan for a certain amount of time. Usually payday loans, it's a 2-week period until your next paycheck. Now, you would be charged a fee, and you would be charged a nominal interest rate for the overall for the loan itself. Now, banks for these folks, for the underbanked, usually will not give them any loan for anything that they're doing because either they have bad credit or no credit, and in the U.S. it's the exact same thing. Now, then they have no alternative but to turn to places like this when they can't pay their bills. And while the ideal world is to have that, in the real world, what you're looking at is that a person or a borrower will come in, pay a fee of about $15 to $20 per $100 that they borrow or that they need, and the fees, not the fees, but the interest rate on the overall money that they take out can be anywhere from 350 to sometimes over 1,000% in some cases. It's a ridiculous amount of balloon payments that are instituted on this, and it's gotten so bad that 14 states have actually outlawed the entire aspect of payday loans and these balloon payments because of the fact that they're preying on these individuals. And this isn't just a small amount of people. When we look at the figures on people who are using payday loans, it's about 12 million Americans per year taking out $30 billion in loans. It's an astronomical amount of money and an area that's just ripe with abuse. So this is one of the particular areas where we need technology to find a solution, which is why we turn to mobile. Now, in a lot of situations, just thinking about this, from an outsider point of view, you might say, well, if they're going paycheck to paycheck, most likely they won't have phones. It's oddly enough quite the opposite. What we were actually seeing with a lot of the studies is, a funny little oddity within these overall payments and these mobile technologies. So the underbanked overall will be Now, we'll utilize about, or 91% of them will actually have a mobile phone. And 57% of these will be a smartphone. Now, if you look at the U.S. norm on cell phone usage, the norm is 87% mobile phone usage and 44% smartphone usage. So the underbanked population, the one that actually does have one account or the other, that's the barrier to entry is lower, actually uses mobile quite a bit more. And if you look at their mobile banking history, 29% have used mobile banking in the last 12 months, and 17% have used mobile payments, as opposed to the U.S. norm of 21% using mobile banking and 12% using mobile payments. Now, this leads me to believe that this entire environment is mobile-centric. So mobile has to be the center point for everything that we're doing to reach this particular part of the population. Now, the unfortunate part is not this, but it's the actual opposite side of the unbanked. So the unbanked have a kind of a flip side. They actually have lower integration within the mobile environment. And one of the major reasons for that is a barrier to entry. So mobile payments, mobile financials, and actually utilizing the mobile phone as a center point for purchasing and for savings overall needs to have a payment mechanism. And the payment mechanism, you can't push cash into your phone. You have to utilize something like a payment card or some other mechanism like a bank account, for instance, like a PayPal account. Now, this situation leads a lot to not utilize mobile phones for that integration, where the unbanked represent about 64% that actually use mobile phones, and 18% of those have a smartphone. And like I said, they're marked lower than the 87% mobile phone usage and 44% smartphone usage of the U.S. populace. Now, 10% of these unbanked people have actually used mobile banking and 12% mobile payments, as opposed to the U.S. norm of 21% actually using mobile banking. But their utilization of mobile payments is right on norm at 12%. So this type of situation leads us to believe that there's two pieces now that we really need to fix. There's the issue of these payday loans, or the loan mechanism, or reaching out to the people who are financially underserved, and reducing this barrier to entry to allow them into this type of market and using cell phone usage for that. So that's where we're going to take a look at a scenario. So this is a technology integration scenario where some of the newer technology that's out there can actually be utilized to serve this population. So within the unbanked, the first issue that we need to solve is the aspect of having a funding mechanism. Now, the way that PayPal handles this is to have a prepaid debit card. So the prepaid debit cards are essentially a MasterCard that you can load up with money. So the money can be from any number of sources. It can be from cash. It can be from money orders and things like that. So you load the card up like any other prepaid card, and automatically you have a funding source. So this is one of the ways that we reach out to this extensive market and try to reduce the barrier to entry. But, and we'll take a look at this a little bit later, there are other ways to do this. There are a lot of other mechanisms that are in place that we can learn from the global market to actually solving this problem as well. So once you have this mechanism in place, once you have the barrier to entry solved, and really with the underbanked population, since you have a single funding source already, that can be utilized for a payment integration. So you can integrate that with your PayPal account if you do not have a credit card, or integrate to the bank account directly. So this is how they can hit that market as well. The barrier to entry is much lower. But the next mechanism comes into place with the aspects of shopping and purchasing and utilizing the phone for what it actually is. So when people are actually paying bills or they're buying things, they can actually use quite a number of pieces of technology that are out there. So if they don't want to do it over online, basically using a banking application online, technology does actually serve to help them there. So one of the pieces of tech that we released recently, a little hardware piece, is called PayPal Beacon. It uses a technology called Bluetooth Low Energy or Bluetooth Smart. It's the exact same thing, just Bluetooth Smart is the new marketing term for it. But Bluetooth Smart essentially works like a bridge from the mobile phone to an internet API endpoint. So when you're, so let me give you for instance. If I have a mobile phone and I'm under tons and tons of concrete in some shopping mall somewhere, and I can't get any signal whatsoever, my phone's dead, essentially it's a brick. With Bluetooth Low Energy, I can connect directly to this device here, and it works as a bridge to connect to the internet and hit PayPal servers, for instance. And the PayPal servers can be used to make payments. This technology and Beacon technologies overall have been implemented by a number of companies out there. This is our solution towards the shopping problem, or towards payments in store, or to utilizing your PayPal account without having a credit card or without having that funding source beyond your PayPal account and just having your center phone. So the way it's going to work is that you'll walk into the store and the PayPal application will wake up and you can say, would you like to check into the store? You check into the store and you'll go and pick out whatever you want in the store and bring it to the cashier. Now when you actually get to the cashier, what they're going to see on screen after you check out is your photo and your name on the left-hand side in their point of sale device, like something like ShopKeep, for instance. That's one of the systems that we work with. And they're going to ring you up, and you'll just say, I'd like to check out with my PayPal account. And they'll just process it directly through your account, utilizing your online funding source that might be a bank account that you have in an underserved situation, or it might be a prepaid card in an unserved situation. So technology overall has now bridged the gap towards doing in-store payments utilizing an online source, instead of having to do banking online, which is an area of contention within that unbanked population. So we're now reaching both of those markets at the same time with some of this technology, which is quite amazing because back 5 years ago, a lot of this was not even possible. And the best thing about this Bluetooth Low Energy technology is that it's energy efficient. It's basically just sending small-scale message packets back and forth to communicate data. That's all it's doing. Now, just to hit on that point a little bit on how easy this technology is able to be developed, we at PayPal run a global hackathon called Battle Hack. So we did 10 worldwide locations last year, and the winners of the hackathon, or the global hackathon, were Moscow. So we had this Moscow team up here that what they built was a donation app utilizing Bluetooth Low Energy technology. So using your phone, you can connect to this hardware device, which was essentially just a little piece of hardware technology called an Arduino with a Bluetooth Low Energy shield on top of those. Those things are very inexpensive. They're usually about $2 a piece if you're buying in bulk or buying from the manufacturer. And you will connect to that device and then connect to the overall shop where you can donate funds. Now, this overall technology can be altered towards any sort of payment, any sort of financial situation that you want whatsoever. It doesn't have to be donations, but it was a good showcase on what was able to be built. This was built by these 4 people in 24 hours. So the overall technology, very quick, very easy to implement, which is one of the things that I love the most about it. Now, one of the things that's usually not talked about within the unbanked and underbanked type of populace is the aspects of saving, because the vast majority of the people within this market are going to be living, paycheck to paycheck, or have just a little bit in savings. They might have been in similar situations that I was, or they might be in completely other situations. But most of the time, you're going to be reaching out to this populace, and that's the situation. So savings is usually not the first thing that comes to mind. But there are also pieces of technology that are in place to solve this problem. Because ideally where you want to get to with this populace is that once you have them able to utilize their phone and bypass a lot of these malicious elements like payday loans and be able to get on their feet, then they can start thinking about savings, they can start thinking about actually putting money away for in case there's an eventuality. But they need help in doing so. Now this is where some of the technology can help there. So one of the ways that we do things is through family-run accounts. So in a lot of instances, this might be a parent and a child, but realistically, it can be a family member to a family member. And one of the things that we've noticed, especially when we start integrating with these global markets, is that as we globalize, as we internationalize our behavior and look towards other markets and other countries, we actually start to work inwards. So we get closer as families, and families is a loose term now, meaning it can be your blood relatives, it can be your friends, it can be your coworkers. Really, it's the people that you surround yourself with. So that's the new family market. Now, within this new family market, there is an area where savings can actually be put in place. So for these family-run accounts, you have a parent account and a child account. So the parent account would open it up and control the funds. Now, they would dole out a certain amount of money to pay bills, to pay eventualities each month or whenever they would need to. And then the entire ability to look into how the money is being spent is controllable through the parent account. So you can actually help guide a person towards better behavior, towards savings accounts, towards these aspects. And in the same battle hack that I was just talking to you about, we actually had another set of winners. So about 3 weeks to a month ago, we had a battle hack for 2014 in Miami. And the overall winners for Miami, what they did was built out an application for the underserved populace. The two guys on the left actually have worked with some of the people within this company called Yellow Pepper, who had done a lot of integrations within the underbanked and underserved population within the Latin American market as well as in the U.S. But what they had built out within the 24-hour period was an application that they called Once. What it did was you and 11 other people in your circles, your family circles, your family, friends, coworkers, or what have you, would all join in on this application, and it would promote savings. So the way that it did that was every month, every single person would save a certain amount of money or donate a certain amount of money into the pot. Then each month in a lottery, one person in that overall circle would get all the money. So it adds an aspect of gambling and chance towards it, which makes it fun, but really what it's doing is promoting the aspects of saving, around putting money away and getting the rewards in return. So unique elements like this that utilize mobile as a center point for working with these smaller markets is really the way to solve this problem. Now, once we get rid or allow people to utilize better mechanisms for maintaining their finances and for payments, then we can start looking at the savings market. And the technology is already there to help. We just need to get there. Now, one of the last things that I want to mention is just to look at what's going on in the rest of the world that we can actually learn from. Because, well, we think that this population is huge for underbanked and underserved, it's actually not as large as some of the other places in the world. So there's two instances that I want to look at. The one on the left, Kiwi, is actually a service out in Russia. Now, if you haven't been to Russia before, it's a very cash-based society. People will get either cash as paychecks, they might get checks and immediately cash them. So it's like being an unbanked person in the U.S. And they pay for everything with cash, negotiate, etc. And that's how the society runs. Now, brings in a real problem when you want to bring in new technology or bring in an internationalized markets that you can't really use that type of scenario for. So what they've done, what Kiwi has done, is they have built out a series of, they almost look like ATM machines, where people can go and put in cash into the machine, and it uploads it into a online account. So it gives you credit towards this account. And PayPal, for instance, has worked with them to be that online account. So technically, you would add your money in. It would go to your PayPal account. You can use your PayPal account then as a funding source. So just like I said before with the prepaid cards, this is another mechanism towards actually solving that barrier to entry for the unbanked population. It's another mechanism. So they have right now about 169,000 actual machines all over Russia, and on the service that actually produces them is quite remarkable. It's an old gambling machine or slot machine company that they were looking at ATM machines, and sometimes an ATM machine might cost as much as $50,000 to produce. They were able to produce these machines, these cash machines, for about $2,000 a piece. So it was quite a remarkable feat of technology innovation to get to that point. Now let's look at the flip side. To the right, it's actually the Latin American market. There are certain countries within South America that do things a little bit differently. So the barrier to entry is handled differently. So they might have issues with government regulations in some cases, with financial institutions, or no real mechanism to be banked or to have bank accounts. The barrier to entry is very high. So what they do is they use things like prepaid phone cards or prepaid debit cards or any sort of prepaid card that they can utilize, and they use this to trade. So we go back to this type of barter system, and these cards actually have money loaded on them, so it ends up being quite remarkable. So they utilize these for transactions overall, back and forth, but realistically, they're transacting removals of barrier to entry. So utilizing a system like that, we can also remove that initial step in the overall mobile game to get the unbanked back to utilizing the mobile as a center service. So the last thing that I really want to mention here is just a couple of points to keep in mind when you're working with these situations, and real targets that you can use technology and use mobile-centric views to fix about everything that's being done within the underserved community. So when you're looking at funding, keep in mind that the underbanked will be having a single savings or a single checking account, one or the other usually, and they might have a mechanism for entry into a mobile device, so the barrier to entry is a lot lower, but you can't treat them like they have full banking control. These people might be utilizing mobile for their banking, but it's in very limited supplies. But then the unbanked will be using things like prepaid cards. They might be using some alternative funding source like what we saw with Kiwi in Russia. They might be using some mechanism like that in order to get to the status of being funded where they can use mobile devices. So keep that in mind when you're looking at the funding source. Then, within payments, we need to have a mobile-centric approach. We have the underbanked situation where more mobile usage than the norm in the U.S., and the unbanked really is just that barrier to entry. And then your targets, and really what needs to be solved is these payday loans are high interest rate organizations, people that are preying on this populace, this like payday loans, this $30 billion a year market with extremely high interest rates. The vast majority of the population would prefer not using that, but they have no choice in most of the cases. And that's what we want to give them within the mobile-centric view. We want to give them the choice for this. We can work with this market because it's massive. There's a higher risk, but the rewards far outweigh that risk. So when you're looking at everything, when you're looking at this overall view, just keep those aspects in mind, and the aspects that it's realistically a large portion of the U.S. that's in these types of markets. So as you're building out solutions for anything really that you need to integrate payments or need to integrate people, this is a market that's incredibly underserved in both finances and in technology. So gear it towards there. If you want to take a look at the slides and any notes, any additional links for content, any of these studies that some of these figures come from, you can grab the slides from my SlideShare account at slideshare.net/jcleblanc. And you can always reach out to me on Twitter. I'm at jcleblanc on Twitter as well. Basically, my moniker everywhere I go on the net. So thank you very much again for having me, and I'm open to questions if anyone has any. It looks like we don't have any questions coming through, so feel free, anyone on the line, to reach out to me at any given time. I'd be happy to cover any of this material or give out some links or cover any of the technology that you'd like.
Thank you, Jonathan. This is Preeti Mehta again from the Doorways to Dreams Fund, and I wanted to thank you all for attending today. Just a quick reminder that our call for applications for the competition, the FinCap Dev competition, closes on April 7th. So if you have that great idea that you've been waiting for an opportunity to develop into an app, this is your chance to do it. And also a reminder that we will have our hackathon this weekend in New York at WeWork Labs, which is a co-working space in New York, and we will be doing this at their Soho location. And finally, we have another webinar on April 3rd at 6 p.m. It is going to be presented by Matt Streisfield of LLR Partners. So please put that on your calendar, register for it. And so many opportunities coming up, the hackathon this weekend, the webinar on April 3rd, and finally the call for a proposal that will close on April 7th. Thank you so much for attending today. We will make sure that we send this, a recording of this webinar to you in the next couple of days. And we will also post it on fincapdev.com. Thanks again, and hopefully we'll see you either this weekend or the next webinar, or we'll look for a proposal from you. Thanks for attending. And thanks again to Jonathan for presenting today.